Hello guys, welcome to the Trading Parrot. United States cut tariffs on Chinese goods from 145% to 30% in just 90 days. In today's video, we're gonna put a magnifier glass on the 4-hour time frame, still resembling the breakout area of 2024. We continue to look at the similarities, the fractal, and of course it's Monday, so we will look into the CME gaps that we have formed in the past weeks. And before the markets open, we're gonna look at general markets and see what's the current progress on the Nasdaq, S&P. If the price was to continue, how high can we get with the push? Where is the next resistance? And more importantly, where is support? Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. And today is Monday morning, so can we get 1,000 likes and completely strangle the YouTube algorithm to force it to show this content to more people? And unfortunately for now, I have run out of the airdrop of $500 on Bybit. I know that one or two users were asking me what happened to that. I looked into it and it really ran out. So for now, I just have the 30,000 rewards, which the link is down there in the description. And of course, as usual, people are starting to flag that there's been some manipulation in the price. Dan is saying that the price action was already showing like something big was coming. Any tiny dip was getting scooped up instantly, and price started to move 1 hour prior to the announcement. We're seeing quite a lot of aware price action precede big announcements lately. The insider leaking is real, and it's used to trade our markets. Keep in mind, seeing this is such a big one, including two major countries. It could be anyone, anywhere. Obviously, this is not big surprise, but good to be aware of. The playing field is never truly equal. And I think what they are referring to is that we get these impulsive moves followed by very flat price action like we can see in here. It feels like there is determination from the big whales that we've seen when we look at the order books. Look at how the purple and the brown whales are consistently just in a long, never taking profits since 74. We can also see the long-term holders that from the first time we hit 74, they have been doing nothing but accumulating. David is saying substantial de-escalation, both sides lower tariffs on the other material for 90 days. This is a temporary measure and hoping that that is going to remain like that, hopefully opening the doors for further negotiation. US cuts tariffs on Chinese goods to 30% from 145, that is pretty substantial, and China cuts on American goods to 10% from 125. And of course, massive move up in the markets. We're gonna look at the pre-market prices to see how that can affect the price of Bitcoin. Remember that Bitcoin took the lead in this if you've been watching the videos in the past few days, breaking beyond the 21 weekly, breaking levels of resistance, necklines, and all of that, getting very close to an all-time high, whereas Nasdaq and S&P stayed a little bit more conservative on that end. So we'll see if today general markets are gonna catch up with that and option 1 Bitcoin follows that trend to the upside, or Bitcoin takes the first dip. Very interested to see what are the news headers looking like today. And interestingly, we got two antagonic news. The first one is US-China trade deal could shed light on Bitcoin's use case. Trader: if the trade uncertainty was driving Bitcoin momentum, it should stop outperforming once the trade deal is announced, an analyst is saying. It's a fair concern, I will say, since the most important deal is about to take shape between US and China, and I'm sure after that many should follow. That should be the biggest challenge, in my opinion, assuming that after those 90 days a full agreement settles. You can see that during the Liberation Day, the Tariffs Day, the price started moving up. So now that we have the opposite event, should we take this as the end of the party, or just as possibly insiders were smelling that this was going to be the final conclusion and they were already trading the upside? Multiple ways of interpreting trading the news. In this channel, we trade data, we trade technicals, but it's always interesting to see what's the current discussion that is going on out there. Bitcoin could also see new highs as a result, particularly if the deal weakens the dollar or leads to renewed liquidity flows into emerging markets. And I have a news for you guys. We're going to look into the dollar, and we've been calling now for a weekend. So for a breakout of the dollar back up, and spoiler alert, it seems that that's precisely what we're getting this week, together with the gold weakening. At least we're going in that direction. Bitcoin is set for 150k Bitcoin price. This is the opposite article on the same day. Price rally as US-China agrees to slash the tariffs. It's interesting that both are in the hot news, one saying that potentially that's the end, and the other one saying that we can carry on all the way to 150k. And actually those are not hot stories, those are editors' choice. And the top one is China trade deal could shed light on Bitcoin's use case. That's the one that is slightly bearish, followed by the one that is quite bullish, pointing to 150k. I'm not sure if you are reading between lines, but I always try to see what they want me to believe from the news. And we are clearly battling now with 106k, that's the current resistance. Yesterday evening, I shared a private video with a 2-minute update with my Patreon followers to make sure that they were aware that that's the current resistance. I'm gonna give you a summary now in just a second. Something got me scratching my head, which is the Fed 3 weeks in a row selling their assets and this week just going sideways. If they can be considered insider traders, why are they currently not loading up, assuming there's going to be so much upside? You can tell that during this whole period that's what they did, and the markets were rallying like crazy. So why going in the opposite direction? That is just something to think about. Alright, let's look at the CME gaps. You can see that I have placed numbers, number 1, 2, 3, and 4, because that's pretty much all the CME gaps that we currently have. Over the weekend, as I was anticipating, we create a CME gap at 103.9. On market open, we push into 106 at CME premium. Of course, on Binance, that's slightly lower. We still don't pitch 106 on Binance. But now we are sitting on a ground that has 4 fair value gaps. Sure, 3 of them are very thin, so much liquidity cannot live in $200 gap, absolutely, but still 4 fair CME gaps below the price. The more substantial is the one between 92.5 to 91.7. Let's look at the prices on Binance to see the real price on an exchange. That is 103.5. Then we have one at around 100k.8. The third one is 96.8, and the last is at 91.600. So in my opinion, that is great incentive to fill those gaps together with the fair value gaps that I keep getting confused. Both are imbalances coming from different sources. And the aggregated open interest is skyrocketing at the moment. You can see that it's catching up with what the price has done. Price went to 104. Now we see that the open interest is going into $31.4 billion. Let's remember that we have resistance at 33, so just 2 more billion up. And the liquidity hand that we produce here reached $35 billion. So it's absolutely a must look throughout this period. What happens once we get into that final resistance? Is that going to go together with the price once price breaks out, assuming it does that? Or is the open interest gonna start pulling back before the price? Either way, we get tons of insights in these movements. So make sure that you stay subscribed to the channel because I'm gonna share these things. Alright, getting into the 4-hour time frame, and I'm gonna repeat more or less what I said last night in the private video with my Patreon community. So in 2 minutes, what I say is that we lost this support at 67 on the RSI, and we started forming a bottoming formation here. So I am looking for the RSI to form a neck at around 68 RSI. I'll give you the prices just in a second. If we break beyond 68, let's say a 69 around here, we are getting the beginning of an early breakout from this descending channel. Notice that the descending channel is against an ascending channel of the price. That's because that's a bear flag. That's because we are producing bearish divergences in here, but no need to freak out about that, because past performance shows that that's precisely what we did between 0.3 and 4 out of 1, 2, 3, 4 highs of the RSI of the breakout from the megaphone pattern. You can see that between 3 and 4, that's what we did. We form a flag going down with price going up. As soon as we get into 76k, without any notice, we get a hidden divergence, and boom, you get a push from RSI 63 into 90. So where are we here? Well, we have held that 63 RSI, which perfectly coincides in that fractal that we are observing, forming a double bottom, but we still don't get the breakout from the neckline. Currently, RSI is at 65, we could say, and we need to get beyond 68 for an early breakout signal. With this move of the price into 66, it was looking like that's what we're gonna get, but so far we have just a wick to the upside, so there is no confirmation. That's the initial confirmation of continuation into 91 RSI. The second, the most conservative one, is that we break this downwards sloping resistance, which at this point we should meet around 69 or beyond. Last night I left the line in here because just in case we break out earlier, but we didn't overnight. So I'm gonna remove the line. The point of contact last night was 71, now is just 69. So we got a confluence now. If we break beyond 69, we get a full breakout, we need candle close, and we need risk management, of course, if we wanna consider a move into 91. So let's just put that level 69 to simplify things now that we have just a single number that we need to look for, and that number is 105.4. Yesterday evening it was 106. That's the number I gave for the final breakout. So far we hit slightly below 106 and we saw a rejection, but that doesn't mean that everything is lost, because the ascending broadening wedge is still holding. If we had a move like this, that we go into the top of an ascending broadening wedge and we get a rejection with the loss of support and trying to re-enter, that is the breakdown from a textbook that we should be looking for a conservative short entry. If that happened around here, that will be an entry around 104, but it first needs to break below that. Let's say it goes to 103 point something and tries to reclaim but fails. That's the conservative entry for this pattern if you want to take a short. The long setup, well, you can see it in front of your face, right? We were at 99.5 saying this is a bearish setup, but we do not enter on a short at that point. We wait for confirmation. We never got the confirmation, and the reason is because it can still break out from the top, even if it's a bearish pattern, even if you have the bearish divergences. And if we were to experience the same thing, that will be a breakout from 106.3. The targets of the breakout beyond 69 RSI or 105.4k in the price is a target to go all the way to 91 RSI for hour. So let me find where that is. So let's move this 69 down here in the reverse indicator and let's put a crazy 91 target. Let's see where that is. At the moment that is at 124k. It is a moving target and it's very sharply pointing down. So if we take slightly longer, let's say we do like this, when the target comes back down and it meets somewhere in the middle, if we get an explosive move, that's the only way that you can get to the actual target. Am I taking this long? No, I am not taking this long. I am looking for way better opportunities. That is because I'm conservative. We have already had a rally from 74 into all the way up in here. We are right there at weekly resistance. I do not long resistance. If we get this final breakout, this is probably the riskiest of all the longs that you could have taken from 74 into here. But hey, I promise I was gonna share even if we find degen setups, and this clearly is one of them. MACD on the daily is still with the mouth open. Momentum is showing a little bit of a small decline, very humble small decline, nothing to worry about. We have not lost the second level of support. The first one got lost, but that's second level of support is still holding there. Let's see where that is. That is at around 102.6. It's a moving target. Yesterday was just $100 below. For me, it's a lot better to wait for a decent pullback, clearing out some fair value gaps in here, testing the point of control. Give me something a lot better, and I will let you know in the upcoming videos that I'm taking a long. I am looking for a long, sure, but I'm not gonna chase a long. There's a huge difference. On the weekly, you can see that where is that resistance? We are in the very beginning of the week and we are above the resistance. So for me, that represents still a lot of risk after 5 consecutive weeks in green, and is the perfect definition of chasing price if you want to enter with a long after this move of 40% without any retracement. The weekly is about to get very close to that target of, I think it was 73. We are just there at 104, and at the moment the target is at around 120.8. So in terms of price, it's not very far, but in terms of RSI, from 66 to get to 73, that's just 6 points. We confirm the bullish cross on the weekly MACD, and that is a big thing. It's not tradable for me after all this rally, just because in past performance we also had bullish crosses that ended up taking you into a bear market. So if you were just having this information on top of the table, I will say it's just a 50-50, no hedge at all, just by seeing an isolated MACD cross on the weekly. The setup of the double bottom was a lot more attractive, but we already broke the neck. We are halfway towards the target. I will say on the yellow line is the conservative take profit, and the green is the aggressive take profit line. We can see as well that price is halfway through between resistance 1 and 2. Number 2 is at around 109.5, 3 is at 123. We are in a virgin month, and the volume from volume flight is starting to curve down. We can see past performance of curving down in the volume. This one led to a decent retracement. Once you enter the gray area, you get a retracement, with maybe just one exception out of the full bull market. In this area in here, the volume started curving down, fully going down, crossing the zero line, and price still managed to rally a lot more. This area in here pinched 69, and then it went to 73, and that's it. So usually volume on the volume fight curving down has a 80% chances of a local top or slightly higher. And I want to come back to my Fibonacci extensions in here of each rally, the one that made 3, the one that made 1 to 72, and where are we right now with this specific rally. So far the performance has managed to get to 0.5, slightly up that we get in here, and we're gonna get more than half of the performance of this particular rally. The rally from 49 to 109 is double the performance that we currently have in here from the Fibonacci extension point of view. Personally, I'm not expecting this particular rally to straight away go to the same target that we almost managed to get with the previous one, that one that got into 1,272. If we went there, that's 150k. So repeating same performance is what I'm against at the moment. I think it's got very low likely to do it in that way with a single move into 150. Getting some other scenarios where we sell off and then later we get into 150 potentially, but as part of this single move up, like take all this move and just place it in here straight away into 150, that's what I'm against. And that's because to do so, the RSI needs to produce a global breakout at this stage in the market is what I think is less likely. And let's look at some signals before we go into the order book this morning. We have had now 2 consecutive leverage squeeze sell orders in yellow. You can see twice we reached levels where the leverage was too high, and we talk about over the weekend about previous performance. We talk about this one that is the worst performing, that had 2 consecutive ones with an average at around 104 that still sold 26% down. So now we have 2 consecutive ones. Just keep that in mind. I want to look at the realized pricing bands in this particular cycle the performance, let's focus just on the cycle, has shown that the price has managed to get to the 2.4 band, cross it, and get in between the 2.4 and the 3.2. We repeat that performance again in November between red and yellow, and if we went now between yellow and red, that is located between 108 and 144. Just repeating the same performance will place the price halfway through between those two numbers. At the moment, that gives roughly 125k. We are in grid still at 70, so take your coffee cups, slap yourself in front of the mirror to look for exits. And one area to look at when it comes to exits is that we are currently with this intra-candle starting this week, we're starting to see an overlap of a warning sell with a gold sell signal on Cerberus. If you have access to my Pine scripts and you have set up alerts, you already got a notification intra-candle for that, so great for you. And we're going to look into the previous warning sells that we had and see in the whole bull market whether they play out or not, how frequently they fail. A warning sell around here at 22 gave us the hint that we are going to start distribution and move back down to 19k. From 23, that's a drawdown of 13%. Then we got another golden sell in here that pushed the price down, and we stay sideways until October 2023. That's 200 days. Great to know that golden sell signal. Here is the one with the most impulsive move of the full bull market that failed. It triggered the warning sell to look out for exits around 33, 34k. Price still went up into 47 and it only started declining later. So that had a huge drawdown. The sell signal though print at 49 and it moved down 20%. So this time the warning sell, the golden sell were not great, but the sell was. Then around 74 we got the warning sell. Great call because it kept the price going sideways for another 200 days. This golden sell in here print at around 92. Price went up quite a lot, but then went down also kind of the same amount. So now we are getting the golden sell pretty early in my opinion because we haven't yet put an all-time high. Notice that all these warning sells, this one here and this one here, was in the context of having already gone into the next range, already putting a new all-time high or something, with the exception of the one that failed, of course. Okay, order book liquidation levels. You can see that we are still in the flag. All we did overnight is just to pinch that resistance and stay right there. Watch out, this is a bearish pattern. Consistently the price action has managed to break out from bearish patterns to the upside, ignoring absolutely the technicals. So that is the warning. The warning is don't assume that you can just blindly short the bearish pattern. If you are considering to build a short and you're very experimented and you know what can happen, that we can go into 120k, 125k and blast up and you're managing that risk, okay, but or if you're placing your stop loss very, very, very tight. There is liquidity in here at 106, so that is a no-go for putting stop losses or placing your risk of liquidation. If you are going to take the long, consider that we have a heck of a lot of downside when it comes to fair value gaps, CME gaps, and all of that, so also manage your risk. Long-term liquidity, let's focus on what's right above the price, and we have this yellow incentive to go up until 109. If we get crossed 110, if we manage to break that resistance, which is to put a new all-time high, then we enter in the most significant pool of liquidations that we currently have in the whole spectrum of prices of Bitcoin in all history. This is 113k where we have the most liquidity, now followed by 68, and third is 125. Liquidation heat map is showing now 92.4 as largest liquidation. The last 30 days show 103, 97.6 and 92.8. This morning we have a delta of 871, putting the longs a higher risk. All this range has had more ask liquidity, orders to sell, but the same story has happened in this area in here and also in this flat area there, and we still got a breakout. Suddenly you see all this bidding coming in without any notice, price just moves sideways. sideways, but the thing completely flips because that means that they want to buy aggressively any move down. So far, we do not have this bidding going on in there, and unfortunately, high block capital, they still don't support alerts. So pretty much you have to be constantly looking at the chart. It says coming soon, and it's been like 6 months. I do need an alert for the bid versus ask ratio urgently. And the selling wall with the move up of 106k has moved up into 110. Wells continued to push up, and we can see the order book in here with that pinch into 105 that was removed, and then 106.2. Sorry, that's 105.6. 106 is still there with just 284, so it's become really thin. What is still heavy is 110. The CVD continues to come down as the price goes up. Fair value gaps, as I mentioned, they are very heavy to the downside, no fair value gap to the upside. And currently, the risk is the Nasdaq facing this resistance, but I have the feeling that people are gonna get really excited for Nasdaq and S&P to catch up with what Bitcoin has already done. Potentially, the S&P also reclaiming the 21 weekly located at 575. I've been keeping you up to date with what happened here in April 2022. So today or this week, Nasdaq has the opportunity to invalidate that scenario as long as it's closing this week above 20,300 or above the 21 weekly. You can see that this week we are starting the week pinching that resistance that we've been talking about. The S&P needs to catch up a little bit with that. Dollar, as I said last week, it was hinting that it was gonna have a breakout, and here during this week you can see that has done great progress this week, reclaiming $100.06. Gold on the opposite side apparently is gonna respect my call for the top at 3.5k. You can see that the breakdown and the retest at 75 so far looks very successful, now creating a bearish pattern in here that looks like a head and shoulders with a neck at 65. If that plays out, it should take the RSI back into 50. At 50, gold can reach 2.956k. That is more or less where we have the 21 weekly, which also I mentioned yesterday that there is a chance that now gold needs to go and test that important level. Guys, if you want to trade Bitcoin without KYC requirements, simple. Just use my link in the description, open a new account, deposit just in 30 seconds your crypto and start trading with leverage, Bitcoin and altcoins, and also benefit from these bonuses that are going to end on 15th of May. We still have 3 days to benefit. After that, I'm gonna have a completely different campaign. Hopefully you're gonna like it more than this one. If you wanna take advantage of this one, these are the last 3 days. Thanks so much for watching, and I'll see you in the next one. Bye bye.